This is Stephanie Dupuis with Dupuis team at Keller Williams, West Sound, and Silverdale. And today we're going to talk about rental investing for cash flow in today's market. There are three simple rules I use for buying rental properties, and they still apply for today's market. Here they are. First, look for a location and know where you're buying your properties. The second rule is what I call added value. The third rule is pro forma. Know how to use a pro forma. The first rule is location. As cliche as it is, this is a truth. The reason is that whether you self-manage your rental properties or hire a property manager, owning rental properties is a hands-on business. I recommend when you're starting as a rental property investor that you purchase properties within driving distance of where you live. Now, where's driving distance? What does that mean? Well, that's up to you. For some people, that's within 15 minutes of where you live, and for some people, it's within 3 to 6 hours. But think through this carefully, because you may need to drive to where your property is, and you need to know that area well. Also, when considering your location, look at the stability of the location. What's the economic stability? Do you anticipate future growth? How are the businesses? What's influencing the location and the housing stability of the location that you plan to purchase investment properties in? The second rule is added value, and this is my favorite of the three rules because it takes some observation, some thinking through your options, and some creativity at times. So today, for the added value section, we are visiting the basement of a Bremerton home, a property that was purchased, and we'll do our best to explain how the property was prior to the renovations, and we'll show you some of the work that's been done since. I call the added value rule the +1 rule. It's always looking for something in a property that currently isn't there but could be there. It's a +1. There are two things you need to remember about added value. Added value needs to ultimately increase and improve the value of the property. So it needs to do one of two things. It either needs to, one, increase the cash flow of the property, or two, increase the equity of the property. Some examples of added value would be, you see a property with a carport, for example. Added value would be, it's easy to box in a carport, build it in, turn it into a garage. The garage has more value than a carport for two reasons. One, you could possibly rent the home for more and increase your cash flow. It also increases the equity of the home. Another example of added value would be like this property. Two-story homes, or rather a one-story home with a basement, homes with basements, it's often easy to add bathrooms. Adding a bathroom in a home, especially if it's a one-bath home, is a great way to add value. You'll increase both your rental income and your equity. So, my favorite way of adding value when purchasing a property is, I'm going to back up a little bit here because I think this is an important point. You're going to develop your own niche as an investor. And my personal niche, and I don't want to spill my secrets here, but I'm in love with this one, is I love to find properties with basements. And the reason why I like basements is there's so much you can do with basements. Most basements, especially in older homes, and I prefer older homes, that's another niche, is that they're plumbed for bathrooms, because the sewer lines often run through the basement, and it's easy to add a bathroom. It's easy to tap into the plumbing to add a bathroom. The other thing I like about the older basements is it's easy to add a kitchen because the plumbing's right there. And if you can find a basement with exterior access, winner chicken dinner, you've got a duplex or an ADU or a mother-in-law. That is the added value lottery ticket. So right now we are in a basement that was purchased a couple years ago, and it had nothing in it. It was a blank slate except for it was my dream basement. It had exterior access, perfect for a duplex or a mother-in-law or an ADU, and it had the sewer line running into the basement and plumbing. So what we did with this is easily added a bathroom in this basement. We're able to section off the stairs, so now we have a separate entrance, okay? Added a door. You have a laundry room that both the upstairs and downstairs can enter. And it's plumbed for the kitchen. For less than $20,000 in today's market, we're able to duplex out a house. And you went from a single family property to a multifamily property to a duplex, and you doubled your rental income on one purchase. So that's called added value, and that's one way in today's market to maximize your rental purchases. The third rule is pro forma. A pro forma is simply a financial data sheet that shows expected or potential income. It's an educated guesstimate. It's simply that, a guesstimate. The thing is, with a guesstimate, you want to guesstimate well. Some people call real estate investing risky because they don't guesstimate well, and the reason is because they struggle to use a pro forma or they use the wrong pro forma. Pro formas follow a very basic formula. It's simply income minus expenses equals cash flow. Let's write that down for you. So the formula for that I like to use for a pro forma is income minus expenses equals cash flow. It's simply this. It's your income, ooh, this is wiggly, minus expenses equals cash flow. Obviously, there's more to it. You need to understand all that goes into your income, what all the expenses are. So your expenses for a rental income or a rental property, maybe it's going to be your taxes, your insurance, your property management, for example. And it depends on what type of rental you have, what types of expenses you're going to have. That's why you need to know what you're doing. You need to get good at this. And when you do this formula, you're going to come up with your expected cash flow. Here are some tips for you. If you're a beginning or experienced investor, that will help you in your rental investment journey. First thing, practice finding potential rental investment properties. You can do this easily online. And the second thing, take the numbers from those homes that you find and those properties that you find and run the numbers through your pro forma. And the third tip is do tips 1 and 2 over and over and over again until it's easy, seamless, and sequential for you. Good luck and happy rental investment purchases.